Hello class and welcome to your final ever edition of Accounting to 11 YouTube videos. I know, it's sad, but don't cry yet. Hold it back, we'll get through this problem, and then you can let it flow like a river. Just let it out. Alright? We'll get through this together, I promise. So what are we going to talk about in our last edition of this YouTube video? We're going to talk about a problem just like we've always been doing. It seems to be the most effective way for you guys to make sure that you really understand the material as you're going through the homework. So, in this final day of our YouTube journey, we're going to go through problem 14-28, which is a homework problem that's due this coming Monday. So, take out your books to page 665. That's where you'll find problem 14-28. And problem 14-28 is dealing with the net present value calculations and uncertain cash flows. In this problem, we have Saxon Products, and they're investigating the purchase of a robot for use on a company's assembly line. Alright, and they give us a lot of data relating to that robot. And then the first thing they want us to figure out is the annual net cost savings if the robot is purchased. So how are we going to do that? Well, to figure out the annual net cost savings, we have to figure out all the dollar amounts associated annually with the savings revolving around the purchase of the robot. Now notice, we're not doing any net present value calculations here. We just want to figure out an absolute dollar amount that we're saving by purchasing this robot. So for this problem, you don't just want to look through all the numbers and find out what they're saving, but you also want to see if there's any additional costs associated with the purchase of this robot. For example, if there was an additional maintenance cost or something like that, you might want to include that in the calculation as well. And with that being said, for part 1, you should get an annual net cash savings of $580,000. So make sure that you can get that number correctly, and then we're going to move right along to number 2. Alright, this is where the fun really comes into play, because this is where we're actually calculating the net present value. So how do we calculate net present value? Well, remember, we look at all the net cash inflows and also all the cash outflows. We look at the dollar amounts for the inflows and the outflows, what year they happen, or if they happen over multiple years to see if it's an annuity. We figure out the rate of return, which in this case is 20%, and then we do the present value of those calculations, and that'll give us the total present value of the cash inflows, the present value of the cash outflows. We compare those two numbers to see if we have a net present value that's positive or a net present value that's negative. And that's going to tell us whether or not we should purchase the robot or not purchase the robot. So as you're going through this calculation, that $580,000 that you calculate in the first step is definitely going to be one of the cash inflows that happens in the second step in this present value calculation. There's also a lot of other cash inflows and outflows, so you have to make sure that you go through the problem, find all the cash inflows and outflows, do a present value of them, and then hopefully you should calculate a net present value of $75,900. And with that being said, your conclusion would be yes, the robot should be purchased because it has a net positive present value at a 20% discount rate. Alright, and then once you calculate that net present value of $75,900, you can move on to step 3. Step 3 is fun because they throw a wrinkle into the mix. They're saying, okay, we purchased this robot, we estimate all these cash flows, but the amounts that we estimated weren't exactly, they didn't turn out what we expected them to be. So we got some problems here. So we basically have to recompute the net present value with these new factors that came into play. So it sounds like the labor hour reduction was supposed to be 25,000 hours, and it was actually only 22,500 hours. So that's going to affect our total annual cash flows from year to year. So basically, we're going to have to start off with what we did in part 1 again, and recompute the annual net cost savings first. Once you calculate the new annual cost savings, that'll be one of the cash inflows that goes into your new net present value calculation. So I'll tell you right off the bat that the new annual cost savings should be $540,000, so make sure that you can calculate that first. That'll be your first goal. And then once you get that, you have to look at the entire net present value calculations with your cash inflows and your cash outflows. And you're going to see that some of them are the same, and some of them are going to look a little bit different due to the adjusted information that they gave you. So use that new information to calculate the new net present value, which you should now get of negative $166,780. So now we're dealing with a negative dollar amount here for net present value. That's not a good thing. That means that perhaps this investment wasn't the best choice after all, because it didn't realize the savings that we expected it to do. So as you can see, we just changed a few different numbers, but it went from giving us a positive net present value calculation to a negative net present value calculation. And that's one of the tough things about net present value, is that when you're calculating it, you're taking into account all these expected future cash flows, which obviously, since they're in the future, they're not certain, and things in the future can change. and when they change, they can mess up your calculations. And that's exactly what happened in this problem, and that's what this problem is trying to illustrate. So hopefully you can get that net present value of negative 166,780 in part 3 for your recalculation computation. Because then once you get that, you can move right along to number 4, where it gets at some of the softer qualities of these net present value calculations, where it's asking you to explain to the president what benefits other than cost savings might accrue from using the new automated equipment. And this is kind of getting at those intangible benefits that might not have an exact dollar amount attached to them. So I'll let you guys figure some of that out on your own. I'm looking forward to the suggestions or ideas that you write down. And then in part B of number 4, it asks you to compute for the president the dollar amount of cash inflow that would be needed each year from the benefits in A above for the automated equipment to yield a 20% rate of return. Okay, that's a mouthful. But think about this. We actually did this calculation on a previous homework already. It's basically asking you to figure out what dollar amount would the intangible benefits have to give us to take that negative net present value that we calculated previously and kind of make it a zero, net it out at a 20% discount rate. So to give you a hint or kind of guide you in the right direction for that, what you're probably going to want to look at is take that negative net present value to be offset that we calculated in part 3 and divide it by the present value factor of, well, what is the time frame that we're dealing with here? 10 years, right? At a 20% discount rate. That'll be your denominator. And you should calculate your intangible benefits to be $39,785. And that is your very quick run through of problem 14-28. And that is your final Accounting to 11 YouTube video dictated by yours truly. So I hope you guys have been having fun with these. Hopefully they've given you a little extra learning opportunities, maybe a few extra things stuck in your head from these videos. That was the goal anyway. Like I said, this is a brand new concept to me. I'm sure it was probably a brand new concept to you guys, but it's been fun. I've had fun making them, so it's been a journey. So with that being said, good luck on the rest of the semester. You still got a week with me learning stuff, but we're wrapping up here. So good luck in all your future endeavors. And I think I'm going to sign off by saying, folks, don't forget to put your hands in the air when DJ plays your favorite song. Have a good one.